Welcome to Golden Forex YouTube channel. I'm very excited to bring you another PD array video from the Genesis playlist. In today's video, we are going to be talking about the fair value gap and how to predict daily highs and lows using the fair value gap. But before we start this video, here's a quick recap of what the fair value gap is. We're going to take a look at the bullish fair value gap, also known as buy-side imbalance, sell-side inefficiency.
This is a situation whereby, you know what, let's not turn this into a biology class.
Let's just call this candle number 1, and this candle number 2, and candle number 3. Now if you watch closely, you will notice that between candle number 1 and candle number 3, there is a gap or an imbalance. Whenever there is a separation between the two wicks, and the middle candle, which is candle number 2, is a bullish candle with an imbalance or gap, it is classified as a buy-side imbalance, sell-side inefficiency. Whenever there is a fair value gap, we consider 3 key levels to be our point of interest. First, we have the high of candle number 1, which is labeled as fair value gap discount low. Second, we also have the low of candle number 3, which is called fair value gap premium high. And third, we have the midpoint of the gap, which is also known as fair value gap consequent encroachment. The inverse is true for bearish fair value gap. So here we have the separation and the gap here, and when the middle candle or the fair value gap is bearish, it is called sell-side imbalance, buy-side inefficiency. And our focus will be on the premium high and the discount low, as well as the consequent encroachment, which is the midpoint of the gap.
Welcome back, guys. Now in today's video, we're going to be talking about how to predict daily highs and lows using fair value gaps. So without wasting much time, let's just get into it. Now, right now it is 15th of August, and currently this is the first hour of trading since the 14th of August candle closed. So there hasn't been much in the current trading day. So I'm going to be using the data to the left to kind of get a feel for where the high of the day is going to form for Tuesday, which is 15th of August trading. So since we're going to be focusing on the fair value gaps, we're going to go from the left to identify which fair value gaps are in close proximity to this current closing price. So first of all, as always, we need to identify the average pip movement within a day. And since this is the daily chart, let's just use 5. And it is around 60 pips right here. The ATR is around 60 pips. All right, so we're going to keep that in mind. So the levels that we're going to be picking should not exceed half of the average trading movement. Remember the order block video where we talk about protraction, which basically means if we're bearish, from the open to the high is the protraction stage. So if on average this pair moves on a daily basis around 60 pips, then for protractions we expect no more than 30 pips, so a maximum of 30 pips protraction. So we're gonna use horizontal lines to kind of select fair value gaps that are in close proximity to the opening price. So right now, looking to the left, this one is too far. We have the premium high of this fair value gap. We're gonna mark that. And the discount low is below current market price, so we're not going to use that. And you move further to the left, we have the premium high of this fair value gap as well, but it's in close proximity to this fair value gap, so we're going to leave it. And then we have the discount low of this fair value gap. Moving forward, this premium high of this fair value gap is in close proximity to this one, so we're going to ignore that. And then we have this fair value gap So let's mark that. And then lastly, we have this fair value gap. So in total, we have 4 fair value gaps. So as you can see, there's a lot of reaction towards these fair value gaps. You can see there's a lot of reaction towards them. So now we are going to go with the upper two, which is the first fair value gaps that are in close proximity to the opening price right here. So we're going to take these two off, and we're going to stick with these 2 fair value gaps. Now, the reason why I'm choosing these 2 is because it is in close proximity to the opening price, and from the open to these 2 fair value gap is in the protraction range. So we're going to stick with these 2 fair value gaps. So I'm going to clear the horizontal lines, and I'm going to use trend lines. So for key level 1, we have this fair value gap. And mind you, I normally use 2 key levels above market price and 2 key levels below market price. That is why I'm selecting 2. So the first one, we have daily key level, and let's see which, it's a fair value gap, which is a bearish fair value gap. So it is a reclaimed fair value gap. Why is it reclaimed? It's reclaimed because we came down, came above it, and then now we're below it again. So it's a reclaimed fair value gap. And it's a discount low, and it's key level 1 above market price. Let's straighten the line up, and then we have key level 2. Which is an inversion level. It's an inversion level because instead of it being a bearish fair value gap, it's a bullish fair value gap, and we are currently below that bullish fair value gap. So that makes it an inversion level or a break and retest. So it's IFVG. It's also a discount low, and it's a key level 2 above market price. So now we have our 2 key levels for our high of the day for 15th of August's trading. So now we go ahead and identify our low of the day for tomorrow's trading. But in this example, remember, we're only using fair value gaps. But as we can see, the fair value gaps that are in close proximity to the opening price of the current trading day are just a few. So in this example, I'm going to just incorporate one of the PD arrays that we have already talked about, which is the previous video, and it's the order block. So for tomorrow's trading, or should I say current trading day, I will use the order block open as my key level 1, because if we go to the left, there's not a whole lot of fair value gaps that we can use for our forecasting. So I will use the order block open as my key level 1. So order block open, which is key level 1, and it's below market price. Let's make it bearish order block. All right, and the fair value gaps that are available to be used for tomorrow's trading is this fair value gap right here. Because if you go to the left, you can see that there is this fair value gap. There is this fair value gap, which is actually too close to the current opening price. And the reason why I don't want to use this is because if you look in the chart, we're always seeking either sell side liquidity or buy side liquidity. So we're either trading for the high, the previous day's high, or the previous day's low. And since I'm anticipating bearish movement in the current trading day, it's only reasonable to expect that we're going to take the previous day's low. So if there is a key level above the previous day's low, I will be a little hesitant to use it because I'm expecting the previous day's low to get violated. That is why I don't want to use this fair value gap right here. So I will go with this fair value gap because that is below the previous day's low. All right, so to make things a little lively, let's use rectangles to just make it a little bit light. And let's change the color to light sky blue. All right, so this is what I'm anticipating for the current trading day. And now let's take a look at it in the lower time frames. So go to the 4 hour. Let's see. And let's go to the 1 hour. All right, nothing to add on the 1 hour. Let's go to the 30. That is my entry time frame. All right, nothing to add. Now, for this video to be complete, we need the full candle of the current trading day. So for proof that I did this beforehand, I will send this screenshot to the Telegram channel, GoldenFX. I will link that channel in the description. So if you want to follow, you can join.
24 hours later.
All right, it's 24 hours later, more or less. And the day has finally ended. And as we can see, we opened and went way above the fair value gap we were using for our forecast. But it seems like we went to this fair value gap in this. But that's fine. It happens in trading. Sometimes you get it wrong and sometimes you get it right. But going into tomorrow's trading, these levels are still valid. And I will post it in the Telegram channel that the levels from the previous day is still valid. And I'll be using the same levels for this current trading day, which is 16th of August. Because as we can see, this is clearly a bearish trend. And we're looking for these levels down below here to get tagged. So for 16th of August trading, we're using the same fair value gap, reclaimed fair value gap discount low, and the inversion fair value gap discount low as well for the high of the day. and we'll be anticipating the low of the previous day to be taken, and quite possibly this low as well to be taken. So I will, like, once again post it in the Telegram channel for proof that I was still anticipating these levels to hold price for the current trading day. So that will be it for this video as well. I'll update you later.
24 hours later.
Hello, welcome back, guys. And it looks like the day has finally concluded, and we opened and traded to the last key level, which was this inversion fair value gap premium high. We went a little bit above it, but that's fine. It's about 5 pips above our key level 2, and we rejected it as anticipated. We came down to the bullish order block open, but yet to trade to the discount low of this fair value gap right here. So that will be it for this video, and going into the next trading day, I have my eyes set up on this fair value gap right here for the next or the current trading day's high of the day. So that is my input on the next trading day, and that will be it for the fair value gap video. And we're only 2 videos out to be done with the Genesis playlist. So once we're done with the Genesis playlist, we will start the weekly and daily forecast right here on this channel. So if you haven't subscribed, make sure to subscribe to the channel and like this video. All right, so this will be it for this video, and see you in the next one.